Hello everyone. In this video, we'll be continuing with our accounting standard 2 capsule number 8 and then we will be learning about the joint products, byproducts and so on. Okay, let's continue. Capsule number 8 says A Limited purchased 1 lakh metric ton of raw material at rupees 100. So the quantity is 1 lakh and the rate is 100 rupees of raw material and introduced it in the production process to get 85,000 metric ton as output. It means first you tell me द इनपुट वॉज टोटली 1 लाख मेट्रिक टन. देखो इतना ना मैंने फैक्ट्री के अंदर डाल दिया. ठीक है, ये हमारी फैक्ट्री, मैंने फैक्ट्री में 1 लाख मेट्रिक टन डाल दिया. ठीक है, मुझे कितना आउटपुट मिलेगा? सर आउटपुट तो 85,000 ही मिलेगा. इट मीन्स मुझे लॉस कितना हो गया, वेस्ट कितना हो गया? यू विल से सर वी हैव वेस्टेड 15,000 मेट्रिक टन. वेरी गुड, एब्सोल्युटली राइट. नाउ आफ्टर दिस आई कैन से if 15,000 has been the loss, see they will give the information about it. Okay, normal wastage is 5%. Okay, in the process company incurred the following expenses. What are the expenses? Labor expense, variable overhead and fixed overhead. What information have they given? They are saying fixed overhead is 1 lakh rupees but it includes interest of 40,625. As soon as I say this, no student tells me, sir but you already told us that interest expense should never be included in the valuation of inventories. Very good, it should not be included. So I can say out of this 1 lakh we have to remove 40,625. Correct. Now after that, of the above 80,000 metric ton was sold during the year. See how much was my output? Output was 85,000 metric ton. They are saying out of this 80,000 has been sold during the year and remaining 5,000 metric ton remained in the closing stock. So out of this 85,000, 5,000 is still in the closing stock. Due to fall in demand in the market, the selling price for the finished goods on the closing day was estimated to be 105 per metric ton. You can say this is your net realizable value or that is your market price. Okay, कि भाई customers are ready in the market to buy that for 105 rupees. Okay, calculate the value of closing stock. See, first I will write here the information they have given. They have given that my normal output or capacity, you can write anything, normal output is 1 lakh metric ton. Actual output is how much? 85,000 metric ton. It means there is obviously some wastage. How much is the wastage? See, if normal is 1 lakh and actual output we have received is 85,000, can you tell me how much is my wastage? Sir, very simple, 1 lakh minus 85,000. Very good. It means the total wastage will be 15,000. Now understand this. Just a second, we will shift it back here. It means wastage is 15,000 metric ton. Simple. But they are saying normal wastage was 5%. Okay, so normal output is 1 lakh. If I remove normal wastage, that is 5%, 5% of 1 lakh, 5% of 1 lakh is 5,000. So 1 lakh minus 5,000 will be 95,000. Now understand, 95,000 is my normal capacity. Okay, 95,000 is my normal capacity and my actual output or my actual capacity is my 85,000 metric tons. Understand? Okay, why? Because it will help us to calculate fixed overheads. Now if I ask you how much is my total fixed overhead, so note fixed overheads will be 1 lakh was my total fixed overhead. Correct. Out of that 4625 is interest, so we have to exclude it, 40,625. Now if I divide it by, with what I have to divide it? Normal capacity or actual output, whichever is higher. Which one is higher? Normal is 95,000 is normal, 85,000 is my actual output. So you can say whichever is higher, so 95,000 is higher. By this I will get fixed overhead per unit because 95,000 is metric ton, this is in rupees. Now I will get the per unit, but I want to calculate fixed overhead for how many units? I have totally 85,000 metric ton of output. Okay, so I have to calculate fixed overhead like that. Then while doing this calculation, I will get, can remove this, instead of normal output we can write here total input. Okay, this will give you fixed overhead and this amounts to rupees 53,125. Simple. Be very careful. This is your actual, this is your normal. Okay, now this is my fixed overhead. Now it will become very easy for us to calculate cost per unit. C. Particulars, amount. First will be cost of purchase. I will give you the PDF in the link, don't worry. Cost of purchase is how much? That was 1 lakh metric ton of raw material at rupees 100 per metric ton. It means that is totally 100 lakhs, or you can say 1 crore. Okay, now after that, what all expenses we had? We had direct labor, we had direct variable overhead, direct fixed overhead, direct variable overhead. Direct labor was how much? 10 lakhs. Direct variable overhead was 1 lakh. And direct fixed overhead we calculated as 53,125. Okay, I would recommend to please take the printout and then see the video. It will be more helpful for us. This will give me cost of production and the total is 153,125. Simple enough. But this is my total cost of production. Cost of production for how many units? 85,000 units. I want the cost for how many units? Only closing stock, that is 5,000 units. So cost of per unit you can say, or you can say cost of closing stock per unit will be calculated how? See, this is our total cost 53,125 divided by 85,000. That is our actual output, right? That will give you rupees 131 approx. Now cost of closing stock per unit is 131. This is cost. How much is the net realizable value given in the question? Net realizable value per unit is equal to rupees 105. Now we already know this is, we are talking about finished goods. So cost or NRV, whichever is lower. Which one is lower? You will say, sir, NRV is lower. Therefore finished goods should be valued at cost or NRV, whichever is lower. Now therefore closing stock is equal to 5,000 metric ton multiply 105 rupees. Simple, understood. That will give you around rupees 5,25,000. This is our value of closing stock. Simple enough. Now moving to the next topic, we have in case of joint products. See, this is the point number 4. देखो, in case of joint products the conversion cost is allocated on rational and consistent basis. मतलब क्या है इसका कि आपको जैसा सही लगे आप वैसे एलोकेट कर सकते हो. सर जॉइंट प्रोडक्ट का मतलब क्या है? देखो, जॉइंट प्रोडक्ट बोलता है कि जैसे मान लो हम लोग मिल्क प्रोडक्ट की इंडस्ट्री में है, ठीक है. अब आप उस मिल्क प्रोडक्ट से कुछ भी बना सकते हो. जैसे सपोज अगर मिल्क का ही धंधा है, अगर दूध बेचने का ही धंधा है, तो आप लोग उससे बटर बना सकते हो, चीज़ बना सकते हो, दही बना के बेच सकते हो. तो ये सारी चीज़ें जॉइंट प्रोडक्ट्स कहलाएगी कि जब आप एक ही रॉ मटेरियल से बहुत सारे प्रोडक्ट बना सकते हो बाय यूजिंग सिंगल रॉ मटेरियल, व्हेन यू आर एबल टू मेक सो मेनी डिफरेंट प्रोडक्ट्स, दैट इज कॉल्ड एज जॉइंट प्रोडक्ट। ठीक है, इसका एक और एग्जांपल हम लोग ले सकते हैं। सपोज वी आर इन द गैस इंडस्ट्री, सो इफ यू आर इन द गैस इंडस्ट्री, गैस, ऑयल, केरोसिन, पेट्रोल, they all will be called as your joint products. Now see, when we write the definition about it, when two or more products are generated or produced simultaneously by a single manufacturing process using कॉमन आउटपुट। हमारे बिजनेस में जैसे हम लोगों ने मिल्क यूज़ किया है बटर बनाने के लिए, चीज़ बनाने के लिए, दही बनाने के लिए, तो ये सारे के सारे जॉइंट प्रोडक्ट्स हो जाएंगे। यूजिंग कॉमन इनपुट एंड बीइंग substantially equal in value। ऐसा नहीं है कि कोई भी प्रोडक्ट कम वैल्यू का है, मतलब ज़्यादा फर्क नहीं होगा वैल्यूज़ में, बट ऑब्वियसली ईच एंड एवरी प्रोडक्ट इज इंपॉर्टेंट। चीज़ इज ऑल्सो इंपॉर्टेंट, बटर इज ऑल्सो इंपॉर्टेंट। ओके, नाउ आफ्टर दिस वी कैन से हाउ टू एलोकेट द कॉस्ट। एलोकेशन of cost in case of joint product। देखो एग्जाम्पल लेते हैं, जैसे मान लो कि 50 रुपये लीटर मिल्क है, ठीक है, 50 रुपीज़ लीटर इज आर मिल्क, ₹50 per liter is our milk। Now this is our raw material। Now raw material will undergo some conversion process, conversion cost, that is we will put it in the factory, then we will produce butter, cheese, whatsoever। When I put it in the factory conversion, then I will get two products, first is say butter, second is cheese। Okay, now butter and cheese when I am making, the realizable or you can say the market value of the butter is, let's say ₹70 and let's for cheese be ₹80। Okay, now butter is 70 rupees, cheese is 80 rupees, but if I tell you that if we take another conversion process to make it more refined, to make of a better quality, say another conversion process, this is you can say the market price or net realizable value is 70 rupees and 80 rupees, means you can sell butter for 70 rupees, you can sell cheese for 80 rupees। Now if it undergoes conversion process again, then it will improve the quality and the cost will become ₹90, sorry, the net realizable value, the selling price will increase obviously because it has been refined now, so net realizable value for this will become 100 after undergoing another conversion process। Now what is the question, sir? You have produced butter and cheese from milk, now what is the question we are facing? See, the question or the problem we are facing is that we used 50 rupees liter milk, okay, how much rupees should be allocated to butter and how much rupees should be allocated to cheese? This is the main question। When there is only one raw material and you are generating two different products, then how will you bifurcate this 50 rupees? How will you distribute the cost of 50 rupees? That is the main question and that is solved by this topic। So at what value you can do? See, it tells us allocation of cost in case of joint product is, now we can write here। Now you tell me, if I tell you that you have to bifurcate, what cost or on what basis will you say? You can say that, sir, butter can be sold for 70 rupees, cheese can be sold for 80 rupees, so the ratio between is 7:8, so you can divide 50 rupees in the ratio of 7:8। Now as soon as I say this, no, another student tells me, sir, but the final sales value is 90 and here the final sales value is 100. So you can distribute 90 is to 100. It means 9 is to 10, this 50 rupees. Okay, it means we can have any ratio. Okay, this is 9 is to 10, 7 is to 8, or you can distribute it equally also if you can prove it. Understand? If accountancy always says if you can prove your method, that your method is best for you for the calculation, it allows you to use that particular method. Some student might say that out of 15, give 25 rupees cost to butter and 25 rupees cost should be added in cheese. That is also proper, but always remember the method should provide a rational basis. Understood? So I can say that allocation of cost in case of joint product can be on the basis of first is on the sale value of each product when the product becomes separately identifiable. Separately identifiable when we achieved that, when butter and cheese you can separate it. Obviously 7 is to 8 is your sale value. That time they are saying that this 50 rupees cost you can bifurcate as 70 is to 80 rupees. Understood? Or the B point is on the sale value after completion of प्रोडक्शन, कि भाई जब पूरा रिफाइन हो गया, फाइनल प्रोडक्ट बन गया. हमारा फाइनल प्रोडक्ट कब बना था? At this stage 90 and 100. So you can divide this 50 rupees in 90 is to 100 ratio. Understood? See, you can have any other ratio also, that is totally dependent on you. The main thing you have to focus is that the basis should be allocated on rational and consistent basis. You cannot say that this year I will give the equal cost, next year on the basis of sale value, next year on the basis of 3 is to 2. You cannot do this. Okay, you need to be consistent in that. Now, this is your topic of joint product and how to allocate the cost of raw material in the different products. The next topic we have here is in case of byproduct. Now, what is byproduct? See, what does byproduct means? See, suppose if you are in the production of butter, okay, suppose you are producing butter in your factory, then when you are producing butter, no, buttermilk will obviously produced in the process of making the butter. So your main focus, your main product is producing butter, but remember the buttermilk obviously will form at the end. Okay, after every process you will have so much of buttermilk, that also you can sell into market. It means butter is your main product, main sale, and the byproduct is your buttermilk. Like that you can say if you are in the process of producing sugar, then you will have a byproduct that is called as molasses. Like that also if you are in the producing suppose oil, then you will have some gas or some chemical fertilizer as your byproduct. Like that there are many industries when the focus is on the main product, but still they get another product and that is called as byproduct. Remember this, their focus was on main product only, but the byproduct also has a separate market, okay, and they can earn profit from selling that byproduct also. The main example for us will be that butter and the buttermilk. Remember that thing, okay? And if you are not aware about the butter and buttermilk, please ask your mom, okay? Now, in case of byproducts, the net realizable value of byproduct is deducted from the conversion cost. Now, what does it mean? See, understand this. Accounting standard tells us you are not supposed to find out the cost of byproduct, okay? They say the simply that for byproducts, number one is that it is a secondary or incidental product as in a process of manufacture. Remember this, they are, or you can say it is generally insignificant in value. Remember that when we learnt about joint product, they were significant in value, that's why they are called as joint products. When they are insignificant, it will become byproduct. I will just provide you a table that will become very easy for us to identify. When raw material is producing, suppose two products, okay, let's say they are producing the two products that are product A and product B, okay, and say your product A is your main product, and if product B is, you have to check that if value is significant, then product B is your joint product. But if value is insignificant, then it is your byproduct, okay. In the case of C, butter and buttermilk, butter cost us 600-700 rupees liter, okay, but the buttermilk is hardly 30-40-50 rupees. When we were producing cheese and butter, they both are still fine, okay, they both are of same rates and all, they do not have that much gap, but butter and buttermilk have so much gap, so you can say buttermilk is insignificant. Now how we will do the costing in the case of byproduct C? Remember this, AS2 says, or you can say that AS2 provides you are not supposed to calculate the cost of byproduct. AS2 says do not calculate cost of byproduct. Then sir, how will we identify the real cost of our main product? Because see, when I am spending 100 rupees to produce butter, okay, suppose I am spending 100 rupees on raw material and then I am producing butter, still I will get the byproduct, the buttermilk also. So you can understand 100 rupees milk I spent, I got butter, and say that butter I am able to sell at 130 rupees, okay, and I have buttermilk also. Now that buttermilk I am able to sell at say rupees 20, okay. Now how should I bifurcate? They are saying no need to bifurcate, you are not supposed to bifurcate the cost of milk. They say that directly write that this entire 100 rupees we spent for butter only, so you will write remove 100 rupees from this, so you will get 30 rupees profit from butter. But they are saying this 100 rupees what you are getting now, that has produced buttermilk also, and you sold buttermilk for rupees 20, you can say you had an extra benefit of 20, so this 20 you can add here and you will say that total benefit you has was rupees 50 from selling the butter. Understood? So there is no need to allocate the cost 100 rupees to 20 rupees. It means you can say you are not supposed to calculate or bifurcate the cost with byproducts. You can write here, therefore cost of main product shall be calculated as joint cost. Joint cost in our example was how much? 100 rupees. Joint cost of main and byproduct, then less नेट रियलाइजेबल वैल्यू ऑफ बाय प्रोडक्ट, कि भाई बाय प्रोडक्ट से जितने भी रुपए कमाए ना वो सब तो मेरा बोनस ही था, तो मैं वो कॉस्ट को माइनस कर दूंगा, उसके कमाए हुए पैसे को मैं माइनस कर दूंगा मेरे मेन कॉस्ट से, तो फिर आई विल गेट सम मनी, दैट इज माय कॉस्ट फॉर द मेन प्रोडक्ट. वी विल सॉल्व एन क्वेश्चन that will provide us better view of this. Okay, this is your byproduct. Now after this we will solve a capsule check. Capsule number 10. During the production of main product Memorex, okay, our main product is Memorex, a byproduct Brucil is also produced. Total cost of conversion is rupees 3,85,000 and 1,25,000 units of Memorex and 7,000 units of Brucil arise from the process. See, my total cost was 3,85,000. Out of that, I produce 1,25,000 units of Memorex and 7,000 units of Brucil. Okay, it arises from the process. Brucil can be sold for rupees 5 per unit. It does not require any further process. Calculate the cost of conversion of Memorex and Brucil. Now understand what is happening. The total cost in our factory was 3,85,000. What have we produced? We produced Memorex and byproduct I got is Brucil. Remember this, byproduct is always profit. Okay, at whatever price I am selling byproduct, this is always profit. So what will I do? I will remove that profit from my main cost. Now tell me how much is my main cost? You will say, sir, your main cost is 3,85,000 rupees. So I am writing here that cost of conversion is rupees 3,85,000. Okay, but sir, your free profit, see, byproduct you can say free profit, that is how much? The less net realizable value of Brucil. How much money you are earning from your byproduct? 7,000 units multiply 5, that is 35,000. So you can say your cost is only 3,50,000 rupees. Understood? This is your cost for Memorex. Understood? So cost for Memorex, you can say this is 3,50,000. Now you can say that therefore cost of conversion of main product is 3,50,000. How many units of Memorex? 1,25,000. It means rupees 2.80 per unit. Simple. This is how you are supposed to calculate cost of conversion of main product. Now remember, cost of conversion for Brucil you are not supposed to find. You will just remove that cost from the main cost. Understood? You will remove the net realizable value. Understand this. Byproduct, why we say byproduct is always profit? Because the company did not focus on the byproduct. It automatically incurred. Okay, in the process of production it will be there. Now company thinks that whatever money I am getting from this, that is my profit only. Okay, whatever money you are getting, you will remove that from your cost. So that they are saying, I spent 3,85,000 to produce Memorex, but my cost for Memorex has been only 3,50,000. So company is happy that the cost became less by 35,000. Okay, whatever I am getting from Brucil, whatever, that is my profit only. This is the thinking, this is the thought process of the company. Okay, we'll solve another capsule. See, during the production of main product Memorex and a byproduct Brucil is also produced, total cost of conversion is 3,88,500 and 1,25,000 units of Memorex and 7,000 units of Brucil arise from the process. This is same. Now Brucil cannot be sold at the time of split off. Okay, but in the last question it could be sold at rupees 5. Here they are saying it cannot be sold. It can be sold after further process. Okay, further process cost 0.50 per unit. It means they are saying वापस से ब्रूसिल को प्रोसेस करना पड़ेगा, वापस फैक्ट्री में भेजो टू प्रोसेस इट. आफ्टर फर्दर प्रोसेस बाय प्रोडक्ट कैन बी सोल्ड फॉर 6 रुपीज. ओके, कैलकुलेट द कॉस्ट ऑफ कन्वर्जन ऑफ मेमोरेक्स. भाई अब मेमोरेक्स का कॉस्ट ऑफ कन्वर्जन क्या रहेगा? नाउ वेरी सिंपल. फर्स्ट वी विल फाइंड आउट द नेट रियलाइजेबल वैल्यू फॉर ब्रूसिल. सी, why we are finding net realizable value? Because to calculate the cost of conversion of Memorex, see, net realizable value for Brucil, how? It can be sold at 6 rupees. So selling price is 6 rupees. Total selling price will be, how many units are there? 7,000. Amount 6 into 7,000 units. So rupees 42,000. Then how much is the further process cost? Less Further process cost rupees 0.50, 7,000 units, that will give you 3,500. See, I was supposed to earn 6 rupees, that selling price 42,000 from Brussels, but I had incurred some cost also, so that is 3,500. If I remove that, I will get 38,500 rupees from which product? From Brussels. So 38,500 is my net realizable value from Brussels. Now, cost of conversion of Memorex. How much is the cost incurred? Cost of conversion is, or you can say joint cost, was 3,88,500 less net realizable value of Brussels 38,500. It will be 3,50,000. This is your cost of conversion for Memorex. Remember this. Now, if I have to find the per unit cost of conversion, then therefore cost of conversion per unit is equal to 3,50,000 divided by 1,20,000. 1,20,000 units of Memorex. This will give you rupees 2.80 per unit. This is how we are supposed to calculate the value for our cost of conversion per unit for Memorex, that is our main product. In the case of when we are having a byproduct also, okay. देखो byproduct से जो भी पैसे कमाए ना उसको we have to remove from the joint cost, okay. This is very simple. Take out your joint cost, remove the selling price of your byproduct. This will give you the cost for your main product. Now, after this we have here point number 6, that is talking about inventory cost which are not included. Which are the inventory cost not included? That are, see, these are those costs you will never add in calculation, or you can say the valuation of your inventory. What are those costs? Administration cost, selling and distribution cost, abnormal wastage, storage cost, etc. See what they are talking about. They are saying you produce the goods in the factory, okay, but administration cost, selling and distribution, they all happen in the office, the main office where all the decisions are taken. If I tell you salary of the person who is working in my office, should this be added in my factory cost? You will say, sir, obviously not, because the person is working in office. Like that, the laborers working in my factory, who will pay that money? Factory will pay or my office will pay? You will say, sir, factory will pay. Exactly. So the wages of laborers should be added because they are the factory cost. But the salary of the employees who are working, or suppose the accountant who is handling the accounts of the company, why should his salary will be added in the factory cost? It will not be added. That's why the product cost do not include the administration cost, because the salary of my managers, employees, that all is administration cost. Selling and distribution cost, this cost you can say that we cannot add it in the valuation of inventory. Why? Because that inventory is still in the closing stock, still in the factory only. You can say we have not incurred any expense only. And selling and distribution cost, these decisions will be taken in the office only. Now you cannot say the product which is already in the godown in the factory, you have not incurred any cost on them, no. So how can you write that inventory cost will include selling cost? It is not possible. Understand this, okay. Like that, abnormal wastage we have already discussed. Storage cost is that cost you can say which is if you are storing in the godown or warehouse. But remember, storage cost can have two meanings. Like, if storage cost is important to store our product to make it better, for example, if you are in the wine business, you are supposed to keep your product for 3-4 years, 5 years, then storage cost becomes important and it will be added in the valuation of inventory. But if suppose you are producing shirts, t-shirts, for that storage is not important, okay. Now for them storage cost should not be included. Remember this. All those costs which will help you to improve your product, which will help you to improve the quality of your product, that you will add. That's why for wine we can include the storage cost in the valuation of inventory, but for shirt, for manufacturing furniture, that and all you cannot add the storage cost in the valuation of inventory. Understood? The importance you have to understand of the cost. Now, after this, we have here capsule number 12, that is, in a production process, normal wastage is 5% of input, okay. 5000 metric ton of input were put in process, resulting in a wastage of 300 metric ton. See, 5000 was our input. They are saying 5% is normal, okay. But the total wastage is 300 MT. It means total wastage is 300 metric ton. How much is normal? You will say, sir, normal is 5%. So 5% of 5000 is 5% of 5000 is 250 metric ton, but the total wastage is 300. So out of 300, 250 metric ton is normal, and it means 50 metric ton is abnormal. See, cost per metric ton of input is rupees 1000, okay. The entire quantity of waste is left as stock at the year end. If waste has no realizable value, what is the cost per unit? They are saying that the entire quantity of waste is left. It means the 300 metric ton is in our stock, but it has no realizable value only. Now, what is the value per unit? See, as per AS2, abnormal amount of waste, material, labor or other production costs are excluded from cost of inventory, and such costs are recognized as expense in the period in which they are incurred. So, you can say whatever value is left in the stock, the amount of abnormal cost, okay, this will go in your profit and loss account, okay, and whatever is your normal loss, that normal loss you will reduce from the main units or the main output. We have already solved so many questions about this in the previous video itself. Please go and check. Now, we will see the point number 7. This is by mistake here. Point number 7 says interest and other borrowing cost. What are they? See, we have already learned interest cost should never be included in the fixed overheads. Now, read. Interest and other borrowing costs are usually not included in the valuation of inventory. But if time plays a major factor in bringing inventory to location of business, interest cost can be included in the cost of inventory. See, generally we do not include interest cost, okay, but if suppose time plays a major factor, it means what? Suppose you are in the again business of wine, okay, it will take 4 to 5 years. Now for that 4 to 5 years, suppose you have taken loan from the bank, you are supposed to pay the interest to the bank. Now the interest you are paying to the bank, right, that interest should be included in the valuation of cost. But why, sir? Because the 4 to 5 years is very long period and it is important to produce wine to sell it in the market. Now, when you are selling it in the market, 4 to 5 years life is too long, okay. So you cannot ignore interest cost in that period, understood? So that interest cost becomes important for you to produce wine, understood? Now understand. Capsule number 14 says the company deals in purchase and sale of timber and has included notional interest charges calculated on the paid up share capital and free reserves. Very good. In the value of stock of timber as at balance sheet date as part of cost of holding the timber. Being the auditor of the company, how will you deal with the situation? Now, what have they done? Company is saying that we used money to do the business. Obviously, they are saying in our equity and liability, no, equity and liability, there was an amount share capital and second was reserve and surplus, okay. Now they are saying whatever money was there in the balance sheet, shareholders funds and reserve and surplus, they are saying we will charge notional interest, means fake interest on this. Why? Because this is our capital, this is our owner's money. They are thinking कि अगर भाई owner से पैसे नहीं लेते, if we would not have taken the money from owner, we would have taken the money from the bank and we were supposed to pay the interest. Now they are saying because we have not taken from the bank, still we have taken from the owners. Now they want to say that interest should be charged because the reality is we would have borrowed from somebody, but because we could ignore it, because our shareholders are paying the money, still we will charge the interest. Now understand what the answer says. Obviously remember, you cannot charge notional interest like that, okay. As per accounting standard 2, any expenditure included in the cost of inventory when it is incurred to bring the inventory to the present location and condition, notional interest charges on paid up capital and free reserves are not being incurred to bring the inventory to present location and condition, okay. Hence, considering the notional interest in valuation of inventory, it is not fair and is not in conformity with AS2. AS2 के हिसाब से नहीं है, आप ऐसे notional interest charge नहीं कर सकते. As an auditor, the valuation of inventory should be qualified considering the materiality. Okay, this you will learn in audit also. It just saying that auditor should tell this that you cannot do this, it is wrong. Okay. Now, capsule number 15 we have here is check. ABC Limited purchases a product from X Limited at rupees 10 rupees each. Okay. As per the agreement, supplier gives a quantity discount of 10% when ABC Limited purchases 1 lakh items in a year. भाई बोल दिया अगर आप 1 लाख आइटम खरीदोगे 1 lakh item, I will give you a discount of 10%. Can ABC reduce the discount amount from its purchases? Or when should ABC Limited reduce discount amount from cost of purchase? Now see, as per AS2, we already know trade discount, rebate and duty drawback are deductible in the determining cost of purchase. भाई आप reduce कर सकते हो. Now, quantity discount is directly related to the purchase, hence it should be deducted from the cost of purchase. Second, discount is an income to the entity. Income should be recognized when it satisfies the following condition. When receipt of discount is probable, कि भाई हमें पक्का भरोसा है, we trust that we will get the discount. Second, it should be measured reliably. As the receipt of discount is probable when the entity purchases 1 lakh item, it should be deducted from cost of purchase when it meets the target of 1 lakh item. In the year, whenever you are meeting the target of 1 lakh, that time you can recognize or you can say you can reduce the amount of discount from your cost of purchase. बात समझ में आ गई. इट इज़ वेरी वेरी सिंपल कि भाई अगर आपने 1 लाख आइटम खरीद लिए तो फिर आप ट्रेड डिस्काउंट को माइनस कर सकते हो आपकी परचेज कॉस्ट से. ठीक है, चलो. आफ्टर दिस वी हैव concept number 6, that is, see now these are just revising because the questions we have solved, it already includes all this. Check. Cost formula is inventory not ordinarily interchangeable and inventory ordinarily interchangeable. Now understand what does this mean. Suppose I have a business of purchasing and selling the markers. Okay, if I tell you that I have purchased blue markers, okay, blue markers, then I have purchased red markers. Say blue markers I have purchased at rupees 20 and red markers I have purchased at rupees 30. Sir, how many markers we purchased? We purchased 100 blue markers and 100 red markers. Okay, at the year end we have sold all the stock except one blue marker is there and one red marker is there in our closing stock. If I ask you what the value of closing stock should I write, you will say, sir, very simple. The blue marker was costing 20 rupees, so you write one blue marker at rupees 20 and red marker at rupees 30. Very easy, very simple. Now it means the total value of the closing stock will be rupees 50. Okay, why you could write the values? Because you could identify them very very easily. Because blue, you said blue marker purchase at 20, so 20, red at 30, so 30. This is called a specific identification method. See, when inventory is not ordinarily interchangeable, you cannot interchange blue and red. Okay, they both are different colors, both are different products. So when they are not ordinarily interchangeable, specific identification method, you can identify the specific, the product, whatever is the product, blue will be charged blue cost and red will be charged red cost. It tracks the actual physical flow of goods. It is also called as actual cost method. Antique shops, expensive jewelry, custom made merchandise, all they use specific identification method. See, suppose there is a jewelry business, okay, you are making some jewelry of specific design and structure, that cost will be different from another jewelry. So that's why they also use specific identification method. See, you can use specific identification method when your different products are not changeable. They all are just different. You cannot say that they all are changeable. Okay, that's why blue is different, red is different. Sir, what will be the example of ordinary interchangeable? See, it will be, suppose you are in the business of markers only and you are purchasing blue markers. Okay, you purchased blue markers from 3 people, A Limited, B Limited and C Limited. When you purchased from A Limited, it costed you 10 rupees per blue marker. When you purchased from B Limited, it costed you 12 rupees per marker. When you purchased from C Limited, it costed you 14 rupees per marker. Understood? Now suppose at the year end, you have three markers, and you know all the three markers are blue only. Now if I ask you, be very careful, listen this. Now if I ask you that calculate the price of three markers, which price you will allocate? The 10 rupee price, the 12 rupee price, or the 14 rupee price? Now you will say, sir, but you can check the bill. Exactly, you can check the bill, but the problem is all the markers are blue. How will you know that which marker is related to A, B or C? You cannot identify, because all the markers, shape, structure, color, everything is same. Now it means it says it is ordinarily interchangeable. You can ordinarily interchange, you can replace it, okay? That is the problem in ordinarily interchangeable, and that's why we have three methods of valuation. How will we value? See, first is standard cost method. The first priority you will give to standard cost method. When expert or the cost accountant provides the best cost of the good, you will hire an expert and he will tell you what should be the cost. Second is retail price. It means the cost will be sales minus gross profit. Suppose you sell the marker at 20 rupees, okay, and you know that your gross profit is 20%, so it will be 4 rupees. It means every cost for each marker will be, you can say, 16 rupees, or calculate through FIFO or VW weighted average method. What is it? One student will say, sir, you can charge all the three market as 10 rupees only. Another is saying you can charge all at 14 rupees. The third one is saying take out the average and charge the average price. It means there are again three methods. What is there? If you are saying charge at 14 rupees, it means you are saying the recent price was 14, so charge 14. It means you are thinking that A and B goods, we have sold everything, so it means you are charging at LIFO. Understood? Sorry, FIFO, because all those are sold and the 14 price will be charged. About FIFO, LIFO, you have already understood these all topics in the CPT or CA foundation. Now that is what we are supposed to learn in the cost formulas, that you can use so many different methods to value your inventory. Understood? But remember the priority, standard cost method, then retail price, then FIFO or weighted average method. Now after this, the next concept we have is net realizable value. We have already learnt about this. I am just telling you the formula. Estimated selling price less estimated cost minus estimated cost necessary to make the sale. Say you can say the selling or marketing expenses that are removed to calculate the net realizable value. Understood? Now next we have here is capsule number 17. Check. X Limited purchased goods at the cost of rupees 40 lakh. This is cost in October 2005 till March 2006. It means what? As on the date of closing, it means balance sheet date. 75% of the stock was sold. Okay, it means out of 40 lakh, 75% is sold. The company wants to disclose closing stock at rupees 10 lakh, that is 40 lakhs multiplied 25%. Okay, it means 75% is already sold. It means how much do we have in our factory? 25% only. Now company is saying I want to show that cost multiplied 25%. Simple. The expected sale value is rupees 11 lakh. Okay, and a commission of 10% is payable to the agent. See, as soon as we read the question, we should remember that the goods should be valued at cost or NRV, whichever is lower. Okay, company wants to disclose the expected sale value is rupees 11 lakh and a commission of 10% is payable to the agent. Okay, advise whether the inventory valuation is correct or not. How will we advise? See, first we will find cost and NRV both, then we can compare that. Okay, now it says AS2 states that inventory should be valued at rupees 9.9 lakh, being lower of cost and NRV. Okay, this is the final answer. I will tell you what were the valuations. See, cost of inventory will be 40 lakhs multiply 25%, because only 25% is remaining in our godown, that is absolutely 10 lakhs. Okay, now tell me what is net realizable value. See, we have just learned the formula, estimated selling price. So I will write here estimated selling price is how much? 11 lakh. 11 lakh less commission 10%, 10% of selling price. that is 11 lakh. So your commission will be 1 lakh 10,000. That is nothing but 9 lakh 90,000. Okay, this is your net realizable value. Now, what would be our answer? Cost or net realizable value, whichever is lower. So, which one is lower? Net realizable value. So, you can say therefore, inventory should be valued at 9.9 lakhs, being lower of the same thing what we have already written here, lower of cost on NRV, net realizable value. Simple enough. Now moving further, we have capsule number 18. Check. HP Limited is a leading distributor of petrol. A detailed inventory of petrol in hand is taken when the books are closed at the end of each month. Okay, at the end of June the following information is available. Check. Sales is this much. See, we are talking about June. Okay, sales, general overhead cost, inventory at the beginning is 1 lakh liters at rupees 15 per liter. Okay, we purchased on 1st June 2 lakh liters, on June 30th 1 lakh liter, closing inventory is 1 lakh 30,000 liters. Okay, compute the following by the FIFO method. What is FIFO? First in first out. First in first out means first we would have sold this opening inventory, then we will be selling this June 1, then we will be selling the inventory from June 30. That is FIFO, right? See, FIFO you have already learnt in CA foundation. Now they are asking us compute the following by the FIFO method as per AS2. First is value of inventory on June 30. On June 30 it means what they are asking? They are asking us closing inventory. Now understand one thing. When we are following FIFO method, first we will be selling the opening, correct? So if they want to ask the value of inventory on June 30, it is given that on June 30 we have 1,30,000 liters. So 1,30,000 liters are coming from which part? Opening, 1st June or 30th June. Now you tell me, take a pause and tell me that closing inventory will come from where? Last 1,30,000 will come from where? See, from June 30 we will take entire 1 lakh, and the next 30,000 we will take from June 1st, 30,000 liters. Understood? Why like this? Because we are following FIFO. In FIFO, this inventory and this inventory would have been sold first, and this will be the remaining, right, till the end. That is why we will take 1,30,000 like this. Now we will write our answer. The first part is cost of closing inventory for 1,30,000 liters on 30th June. Which one? 1 lakh liters of this, 1 lakh liters at 15.15, then 30,000 liters at 14.25, 15 lakh 15,000 and 4 lakh 27,500. So the total will be 19 lakh 42,500. This is our total cost, or you can say total value of inventory as on 30 June. Simple. Now what's the next question? Amount of cost of goods sold for June. Now cost of goods sold means whatever goods we have sold, that cost we have to find out. See, this 1 lakh is entirely in our closing stock. Okay, this 2 lakh liters, 30,000 is still in the closing stock. It means out of this 2 lakh we have already sold how much? We have sold 1,70,000 liters, and we have also sold our opening stock of 1 lakh liters. So you can write here value of cost of goods sold will be opening inventory completely we have sold. So the cost for which we have sold is 1 lakh into 15, that is 15 lakhs. Then add purchases, Purchases are how much? Out of this 2 lakh, 1 lakh 70,000 is there, no? Or you can do one more thing. You can write the entire purchases, okay? Purchases were how much? 2 lakh into 14.25 plus 1 lakh into 15.15. This will give you 43 lakh 65,000. Okay. Then you can less closing inventory. You can do any of the method. I am just taking this route. What you can do, you can also directly do 1 lakh liters this and 1 lakh 70,000 this. Okay. Both answers will be same only. Less closing inventory. Closing inventory is how much? 1942 500. 1942 500, and that will give you the total of 3922 500. This is your value of COGS for June month. Now after this, the third they are asking is profit or loss for the month of June. So point number 3, profit or loss. Sales is how much? Where is sale? See what we have already sold. We have sold this 1 lakh liters. We have sold this 1 lakh liters. Okay, they have directly given us the amount, so we are not supposed to calculate anything. Sales is 47 lakh 25,000. Then we will remove from it COGS, the cost of goods sold, that is 39 lakh 22,500, and you will also remove the general overhead cost, less general overhead cost, that is 1 lakh 25,000. You can put the brackets for the negative amounts, and hence your profit will be 6,77,500. This is your profit. Understood? Very simple. Now the next thing we have here is concept number 8, that is the last thing, disclosures. What are you supposed to disclose? See, accounting policy applied in measuring inventories including cost formula. See, whichever inventory policy, whichever cost formula or the costing method, FIFO, LIFO, weighted average method, specific identification, whatever you are using, you have to tell that. Okay, you have to disclose the fact. Carrying amount of inventory classified appropriately. Example, finished goods, work in progress, raw materials, spare parts. See, how much finished goods you have to disclose it. How much work in progress you have to disclose it. How can you say? You can say raw material is this much, work in progress is this much, finished goods is this much. Like this you are supposed to disclose. Okay. Any changes in accounting policy with respect to valuation of inventory and its effect on the financial statement. Say suppose you are using FIFO method. Okay. Now from you are changing FIFO to LIFO. Okay. You have to tell why you are changing from FIFO to LIFO. Okay. You have to explain the reasons. Then you will tell what are the effect of changing method on our financial statements. Okay. Because see, when you are changing method from FIFO to LIFO, the value of closing inventory will change. That will change my gross profit in trading account. That will also change my total of my balance sheet, and that will also change the liquidity position. If you remember, we used to calculate liquidity ratios in our childhood, current ratio, quick ratio, all those things. Correct? No? So that will affect that also, because inventory is the part of current asset. So we are supposed to disclose those facts. Now, after this, the last capsule we have here is capsule number 19. Let's meet Mr. Mehul. Okay. Mr. Mehul gives the following information relating to items forming part of inventory as on 31st March. His factory produces product X using raw material A. Okay. Determine how each item of inventory will be valued as on 31st March 2015. Also calculate the value of total inventory as on 31st March 15. Okay. 600 units of raw material A purchased at rupees 120. Okay. Replacement cost of raw material A as on 31st March is 90 rupees per unit. See, this is the cost. This is the replacement cost. We already know cost or replacement cost, whichever is lower. In that case, remember, if we are selling the finished goods below cost, please go and check the formula for this. So we can write here, I'll just erase this. the raw material A shall be valued at cost or replacement cost, whichever is lower. Therefore, 600 multiplied by 120 or 90? 90. So it will become 54,000 rupees. Simple. Then 500 units of partly finished goods in the process of producing X, and cost incurred till date is 260 unit. Okay. These are 500 units of partly finished goods. It means this is WIP. Okay. Cost incurred is 260. So I can write here cost is 260. These units can be finished next year by incurring additional cost of rupees 60 per unit. Okay. So now additional cost will be 60 rupees. So you can write here that we have to put another detail here in the question, that was selling price given is 300. Okay. Now cost is already given 260 plus 60 we will do. So the cost will become 320 rupees, and we will calculate net realizable value as selling price minus extra cost. How much is the extra cost? 60 rupees. Selling price is 300 minus, this is 300 here, minus additional cost, extra cost is 60, that is 240. So cost or net realizable value, whichever is lower. Therefore 500 units should be valued at rupees 240 each. That will be 500 into 240, that will be 120,000, 1,20,000 rupees. Simple enough. Now after that 1500 units of finished product X and total cost incurred 320 per unit. Okay. Expected selling price is 300 per unit. Okay. So our cost is how much? 320. Selling price is 300. So it is very easy. You can directly say cost or NRV, whichever is lower. See, I am just writing like this final answer. You have to write the full statement as per accounting standard 2. The closing stock, the finished good must be valued at cost or net realizable value, whichever is lower. Therefore the value will be 1500 units multiply 300, that is 450,000, 4,50,000. When they are asking us about the total value of the closing stock, check total inventory value as on 31st March. What all values we will add? We will add 54,000, 1,20,000 and 4,50,000. Okay. So the total will be 170 and this will be 6,20,000 rupees. This is your value of inventory as on 31st March 2015. Understood? This is our accounting standard 2. Please take the printout and then check all the capsules, read all the concepts, so that you will have a particular flow how the concept is going, how the questions we are solving. Okay. That's all for accounting standard 2. Thank you so much.